Good afternoon. Welcome to another Traders Community podcast. Wrap up of today's trading. We have the glorious Madavi here, and we're just going to go through pretty quickly. We had a continuation of that bear rally today, or little bull bounce, 2 days of the bulls, which has come off technically very nice as we spoke about. So just a quick reminder, this is not financial advice, hunting advice, or any of that sort of advice. Make your own decisions, gamble responsibly, trade responsibly, and take responsibility. Okay, without further ado, so what we saw today was basically a continuation of yesterday. And so we tend to get these squeezes, as we've said, so it's all kind of going very nicely. The hard thing always is trying to pick a top in a squeeze, so that's why you listen to the market, use your grid. So here we are. Here we have the oil trading 114.26, again up strongly again with as far as fundamental news, OPEC keeping everything the same is the talk. Same situation really everywhere there. There's also a little, and part of the reason the stock market's up is hope that China comes back sooner rather than later. So that affects both of those. Okay, the S&P 40.53 on the SPX. It's a decent bounce, but in reality, it's still just over 4,000. The Russell 2000 1837. Vol came off nicely today, and remember that's one of the main things we look at for sentiment. They seem to be working together. Nasdaq 12,258, and Natgas, a really volatile day. It was the expiration of the previous contract, so we had that plus the EIA report. Obviously the market got really bulled up, so we came off about 70 cents. That's a big move to the downside. So as I said, dribblers, don't go near this. What really was today, we had a lot of new highs on a lot of oil and gas stocks, a lot that you know that we have in portfolio and that we watch, and some gave good exits. To take some off, you just never know, right? So I think Rattler was one we exited today, and EQT, and lightened up on some other names that you may be familiar with. Okay, let's look at the SPOOs real quick. So the S&P, if you remember yesterday, we had a bit of a long session. Johnny was asking us what was going on. We're explaining about the power of the Tankin on the daily. So let's start off, and the others, and you can see again how that held. And remember what I was saying, you don't target, on a short-term chart when you got this sort of thing above you. You don't know. We're going to work it back. But it was bullish as long as it stayed over the Tankin, which it did, obviously. And on the weekly, for the first time, we had a green spug. Remember, 1, 2, 3, 4, 5, 6, 7. So it looks, well, we'll see what it does today, tomorrow. But where was last week's close? But to get 8 down, it's got to be a pretty big sell-off. Anything's possible, right? If we go to the daily, you can see, went from the daily, you can see the Tankin hold there. And here, Johnny showed up again. Good to see.
Yes.
He's been trading almost 24 hours, so he's going to sleep all weekend, I think. So you can see where we left off yesterday, Johnny's question, and on the daily, you can see on the hourly, it did the same thing on the Cajun, came back and tested one more time early in the morning, and then we just ran up all day. It never even got near the Cajun again. But what it did do, and this gave one selling opportunity, and you can see it tested this breakdown level from the 18th, right? Went exactly to it. So remember, fractals or mirror images are very common. People they're unpredictable in a predictable way, right? So you can see what happened. And when we go to the 5 minute, you can see this was actually between +1/8 and 2/8. So as far as breaking down, it's pretty clear what's get under for the, what time frame is this? 60. You got the Cajun holding it. If we go all the way down to 5 minutes, you can see how it's just gone sideways. Now, remember my advice on this stuff is, like yesterday, no overnight, sideways, you let the market dictate till the wedge is over, right? And the Dow, you can see it pretty well signaled when it got into this megaphone. That's one look at it. We have the other look here, where it's very choppy. It's hard to actually, I haven't made my mind up what this actually is, a megaphone or a down trade. If you look at, we have another view of this. I think it's here, isn't it? So here's another view of what it's doing. So we'll know today if this is what it is, right? Or tomorrow, sorry, end of the week. You see how that settles. This tends to, if the Adams fractal, means that it's going to at some point overshoot to the downside there. So is that it? Hard to say. So let's talk Nasdaq with Madavi. What do you got to tell us, mate? You there?
Madavi's soaked out for a moment.
Oh, okay. So what we got on, same pattern on the daily. Remember, not quite as constructive as the S&P, but we had the same pattern, failed double bottom, minus 1/8. We came up, we're just continuing up on the 60 minutes. You can see how the minus 2/8 just works out beautifully. These rules. And anyway, today you can see exactly the same thing. Cajun. And so often they're going to be similar because you got Apple and stuff like that in it, right? And so really the turnaround today, which we mentioned, was because of two things. The video went from down to up, and we've been getting crushed on retail stocks, so particularly Target, that's the upmarket target, Walmart, as you recall last week. This week today we saw Macy's jump 19%. Dollar General jumped 14%. Dollar Tree jumped 21%. And you might remember this one from yesterday. Williams-Sonoma jumped 12%. So there's a lot of bottom fishing and all this. So as I said, most people, so many people, I wouldn't say most, are unfamiliar with bear markets. So, and they just, because something was a lot higher, they got to buy it. What we're doing as traders, just keep it very formulated to your grid. Don't get emotional and play those rules. Okay, so Madavi's not here at the minute. Let's jump on to oil and gas. So Novak out of Russia was out making comments about, a few things there with Russia. They cut their rates today. They have a hell of a situation there. Their inflation's through the roof. People aren't trading with them other than, and to give you an idea of the situation they are, the ilk, just not long ago, the US put forward a sanction on North Korea for their testing and that. China and Russia vetoed it. So if you got any inclination that there's that of what's really going on in the world, just open your eyes and use your common sense. So that affects so many things, right? Or the lockdown situation. What do you mean? What does that mean?
That was great.
So let's look at Natty, right? So here's our daily. Remember, that couldn't have been a 3, so now we're trying to work out what this is, right? Whoops. Where is my pointer? Right there. So the question now is this a 5 or is this a 5 of a 3? So in other words, we're working out what this is. So you keep it very, very simple. So it almost got this. It looks like up here plus 4/8. Then it got just above yesterday's high and then got drilled, right? So these are, look at this, exact replica of this. See this? So if you're clear-minded and don't get caught up in it and disciplined, these are fantastic markets. Plus 3/8 all the way down to the 50 and 4/8. Rallies all the way back up to the next level, 4/8, right? So this is going to be your big level for support, is almost a plus 2/8 here. but this tanking, right? And then under it, remember what it did here. So just be open-minded about what's going on and very disciplined. If you go to the weekly, and remember, a lot of this stuff often happens around settlement. So today's high, there you go. This week's high, spit of the 8-8. So clinical stuff, and that's why we took stuff off today. You see all this, how it runs it all, Johnny? And see how all those people that aren't from the energy world are so far behind. So we go to weekly. I don't know why it keeps doing that in the computer. On oil, you can see it's going to be a big close what it does tomorrow. See these, if it can get back up here, right? So pretty clinical.
This is which one?
This is oil, WTI.
Yeah, it's hard to really kind of see what it says.
Up in the corner, it should say oil weekly.
And, for a guy that's trying to learn this stuff, it's very important to look at it and to kind of start realizing what's happening, because if you're not a technical guy like you want to at least be able to play the big guys like Apache, Exxon.
Oh, the stock version of it, yeah.
Stock version of it. So that's where you got to start, period.
Well, here's the reality, like I said, and so down here, Exxon was $33. This is where myself and a lot of people got in. All around here. The reality, it's going to be interesting because there's a lot of people that either work for energy companies in Houston and Dallas, but we were talking about Houston, that's what I'm talking about, that bought into their companies for nothing, literally nothing. Some of these. Apache's a good example. That's $5, I think. And so that what you've seen is either supporting or equity deals because no one lent to them. There's people that are worth millions now that didn't have anything. So that's supporting the economy down in here. But they're also mindful people because they've seen the boom and bust. So it's interesting how that's all going to play out, right?
So the big question for a guy like me is it dangerous when you start getting in at these levels?
Is that a silly... Are you joking with that question?
No. It's a serious question because I myself see and hear a lot about getting into Occidental, getting into all these dividend stocks for guys that are normal, not got that industry guys like you. But it's good to get a little guidance because it is really high compared to where you got in, but is that really a bad thing to do still?
I would just ask you this question. So down here, the same people that were telling you never to buy oil stocks told you to sell them all, right? Now those same people telling you to buy them up here. Like today, you took profit on FANG, right? Diamondback. Good profit. You made basically this move. And you made a comment about dividends. Look at reality. Look at the percentage that you actually get. So you booked like a $14 trade, right? Profit. The dividend's 12 or 14 cents. So my answer to that is do the math. When the herd gets in anything, that's why I showed that Alcoa chart the other day. The sheep get slaughtered, right?
So here's the thing: is like a lot of guys want to buy, get in,
but it's their problem.
No, they want to get exposed to their portfolio, and they don't want to sit and sit or scalp or trade, even swing. They want to sit and invest. What would you say to those guys?
I would say, for a start, first question is, why are you buying it up here? Why didn't you buy it down there? Their answer will be invariably because, I heard everyone's buying it. Okay, what did you buy before? Tech stocks. How did that work out? So, in other words, you got to be, the whole point of, if you're investing, is you buy low and sell high.
Well, this is what I would say. I would say, let me save you some money. All right, I'm going to save you a lot of money. You take this course. By the time you're done, the knowledge you gained in that time, and you'll have a better opportunity to buy cheaper stocks. There you go. How's that, mate?
Yeah, 12. I'll put it this way. What am I doing, Johnny?
You're saving them a lot of money.
What am I doing with energy stocks here?
Well, then the opposite of that would be just stay out of them, period, and then not take any?
My question to you was, what am I doing up here today? What did I do today?
You're either keeping the stuff that you have from a long time for your retirement, or you're slinging stuff.
Well, I'm taking profit was the answer you're looking for, right? I mean, look at that, something like EQT jumped from $42 to $49 today, right? That move on natural gas happened yesterday. They were still buying more of it today. I mean, that's a no-brainer to take profit.
That's always
so these things move with commodities. They move with it. And make no mistake, with the political climate, the moment these things start falling, they're all going to hate them again, right? It's going to get all bad political. Look at, you've got the United States passed a bill about oil gouging or energy companies gouging, right? Last week. You've got over in England, they're talking about a windfall energy tax. In the next breath, they're begging all these oil companies to help them out while they're threatening them. Just think about that, right? That's the environment. So what do you...
That bill passed, mate. The tax bill is already on.
The one in England? Did that happen? That was today, right? So
this morning.
So that's just mindless, right? So if you're BP, who's English, you just say, well, why would we?
Well, BP made a mistake, you know.
What did they do?
Too much money they made.
Well, the reality is, how much money did they lose? Exxon lost 5 quarters in a row, right?
Well, you know,
many of these companies couldn't keep people on. But so my point is that's irrelevant. So to all these people, so as an investor, if you're getting in up here, look, if oil keeps going up, or it will pull back on and off, you trade off all these support lines.
Relevant because they always look at today's. They don't look at yesterday's.
Well, so they're the people that don't make. They're the people that don't make money.
Well, those are government officials.
A lot of your audience are people that are just now starting to get exposure to this, and I know you got a lot of listeners that already have been exposed. But I think it's good to look at both lenses a little bit.
Well, you just asked me what I think. I think if you're buying up here, it's pretty high risk, right? Very high risk. I mean, if you missed it, you missed it. That's what you got to understand. The reason all these people got caught in all this crap like Cathie Woods bought bloody Tesla at 1,200 is pure greed and not making your own thing and listening to bullshit. End of story.
We got a big Cathie Woods fan here. Be nice.
So, but it's all relevant what price you pay. And what a lot of people don't, because it's like, we've had this, so a lot of people, and I say right at the top, right, gamble responsibly, because that's what most people do. So if you look at the results of how many people are successful trading, it's very comparable to how many people go down to Vegas and a professional blackjack. I mean, it is what it is. It blows me away that it takes oil to get to $114 to people think you got to buy it.
Well, I tried to buy it when it was like negative 20.
Sure you did.
Yeah, out of cover.
So, I guess one thing, mate, I know you're on your course to,
your rep days in.
Do the date. But here's what I want to let you know. In the last week, I bought Fang, I bought Apache.
And you killed it.
And it's just not like there's not ever the opportunity, even though I'm not going to sit and hold it. Maybe that's the point I'm trying to make.
So you just got that wave 5 and all these things I just showed you. That's what you got, right? Look at the. I just showed you the natural gas price, right? That's what you got. You got this move. That happens every other week in those stocks. I've been doing it all year for 9 months. Short of bludgeoning you to buy them. But when do you buy them? Because you read somewhere, they're starting to buy it. Am I wrong?
No, man. I just, I got so tired of hearing you yell at me all the time.
Well, me yelling at you and then Madavi clipping you.
I love you, mate. I'm waiting for that book to come out.
Mate, no, I would have bought it today,
The book?
In the Hall of Fame, I can't be doing it no more,
The thing you're in the Hall of Fame for isn't anything to do with stocks, I hate to tell you.
I would have been loading up, man. But they go, you're too good for this.
But anyway,
I just answer a lot of questions for the caller or for the people that are listening, because what I was trying to get at is I was able to do it because I watched this stuff and I wasn't looking at trying to hold it for retirement. And you reminded me that even though it's great that it has a dividend, there's a couple of things about that. Number one, it doesn't really matter. But number two, it might attract other buyers, so it keeps the liquidity there, I think. So I don't
at a certain price, right?
Yeah.
So it's also relevant to the bond market, right? So a dividend is just money, interest, right? However you want to compare it to interest. So all of a sudden, but here, look at this. So here's interest rates. The 10-year is at 2.7. It was at basically zero not long ago, right? So that means it's gone up 2% at least, right? That's what you compare your dividend to. So why are people buying dividends here, not down the bottom? The smart people were buying dividends on something like Exxon when it was $30. The dividend, it was the same dividend, right? So it's 10, 15% or something versus 3% now, 4%. So all of a sudden these bonds get more attractive. It's all maths. It's all simple. It's all being able to just, everything's logical if you want it to be in life, right?
So I guess one good thing about that you're bringing that up, mate, is there are a lot of people out there that are investment gurus on the YouTube channel.
Oh, they're full of shit. Yeah.
You want to buy these value stocks because the other stuff is really...
So firstly, you don't have to be in the stock market, right? You can be in cash, right? It's an uncertain world out there. You have a house.
Yeah.
Whatever it may, yeah, whatever. These stock. Look at this one we made money on last week. Okay. So what happened to Snap? There's Snap, right? So all the way down, you've got people. Oh, it's good value here. It's good value here. Good value. I mean, where is it good value eventually, unless it goes to zero? But the reality is, we banged in the short. We're out. We take that money. That's good value, right? So you compare just holding your cash at 1% or whatever until your next opportunity. And don't forget, you can short. You don't have to bloody buy. That's still an investment, right? It's like
a lot of people...
They don't understand it, right? It's the same... Well, let's put it into perspective. If you're buying the yen against the dollar, you short the dollar, right? Yeah. If you're buying... So it's the same mentality. A lot of people don't understand it. Well, I get what a lot of people think. That's not what I'm trying to say. The only reason we do this is to show what goes on in the bigger shops, right?
I know this is why it's important for me to say this. You know, when I first started trading, the guy was trying to hammer in my head that if I'm short, my losses are unlimited compared to buying it. You know.
Well, 100%.
Scare people. That's the scare tactic that scares people because they think they could lose more than they ever have.
Well, you can. That's why it's important to know what you're shorting. So specifically, we're talking about Snap. So yes, if you're shorting a low floater or something like that, 100%. GameStop and all this sort of thing created that situation. But that was also a special situation.
I know a guy that knows about being Snap shorts, and he got beat up. You know, I don't know if you know this guy. He's a legend. He's like the legend of legends. If you don't know him, I'll introduce him to you.
So when you short, it's when the trade is short. You don't look. If you just sell for the sake of it, it's like buying for the sake of it. It's the same result in the end, right? For 90% of the time. He was a legend, but for not the right reasons, right?
He's still a legend.
Yeah, some people do it directionally, some people do it for inside information.
Everybody looks up to this guy.
But we can overthink all this. I'm specifically talking about trades in a bear market at this time, off these charts, off this information. Not shorting or buying per se.
A couple other things that people say so people could understand what.
100%.
this is a bear market. That is key. It's just like the bull market. It's probably better off you being on the long side of things compared to short. On the bear, you probably want to be on the short side more than the long.
Directional.
Right, and don't forget, this was we called this bottom down here, gave you all the reasons, the double bottom, all that. So guess what? In a bear market, you can play the bounce, or you just wait for the sell-off to rising bear.
Ask you, mate, are we officially in a bear market yet? Because nobody has said we're in a bear market yet.
Firstly, I think all that's just well. Let me just say something. I think all of that nonchalant is just a load of bullshit. So why do you wait 20% of a bloody major market? We said this the other day. Why do you wait when most volume, all the record volumes up here? Why do you wait 20? Oh, so bear market now you start selling. Oh, okay. That's just something for analysts to keep changing their thing. Most of these analysts don't know what they're talking about. TV hosts don't know what they're talking about. They're all dribblers, right?
You mean they lied to us?
They don't. They. It's not even lying because they create a level where we can call it a bear market now. So think about what they're really saying. They're really saying they weren't wrong all up here because it was still a bull market, right? It's all just.
Anybody wants to sue them? Make you be your expert.
Yeah, look, I'm not in the mood. I'm not in the mood. I'm not in the mood for shit, right?
No, I'm serious. But
I'm just trying. So it's all the way everything goes, right? Yeah. So, but most people think, no one knew it wasn't still a bull market, right?
The reason I'm saying all this is all propaganda.
Well, that's the word. Actually, that's the word. That is
not working for you. They're working for these stocks more. Try to keep them up. Those are all the reasons I'm saying this so people could understand it.
Well, I think they're more working for that. I think they're working more for the brokers and the bankers and everyone. So when it's a bull market, they can sell their issues, their rights issues, their IPOs. And the reality is, that's why I don't think you can use the word lying. I don't think they even know because it's in their mind. Look at last Friday, when it did that spike, we got that double bottom and that fail, right? We talked about on the daily, you can see it better than anything. All over CNBC and Bloomberg and all these channels. Oh, we hit a bull bear market. You saw it in news headlines. Guess what it did? Bounced. We've had a 200 handle bounce. So just think what that did. It got a lot of people probably out of their stocks or short. Oh, shit. It's a bear market. This thing's going to zero. Now, it may well do all that. But what it's done, just think how much money's lost just in this little move, right? And they're buying rubbish again. It's not as if they're buying the good stocks.
Absolutely. And this is the thing is, 1 week they'll tell you how great the stock is. Then the next week they'll tell you how shit it is. And most people how can they go so extremes?
Right. And the worst of these companies are people like...
and as for a lot of these people don't know what it is. I can see some of these people who are just not stock people, just read the cards. But some of these people have been around there for like 20, 30 years.
Mate, we talked about it. We talked about this bloke a while ago. Tom Lee, I think his name is. So this bloke, in 2008, they did a story on him. Remember that? He was saying, we're going to all-time high. He's still around today. Like, they never admit they're wrong. How do they exist?
But Tom Lee was around like 3 times a week. Now he's here once or twice a month.
But he's still, because he's still, remember, every time they're on, we're still going to the all-time highs. And
he's made a couple bad calls already, and 2 more bad calls, we're not going to see him until the next bull market.
Right. But point I'm trying to make is that he got all, and Blodgett was another guy. They got all these people way up there in. They lose a shitload of money. They cycle through the next lot. It's the same people, which tells you there's no moral clause or anything with these people. They're all just evil people.
The guy that talks about
symptom of society, really.
The Asian she-male looking, whatever he is,
Okay.
There's a guy on CNBC that comes out and he's like all totally convicted that.
That's him. He's Asian, right?
No, he's not. He's
Oh,
a
then
white
that's
guy.
not him.
And what happens is he tells you, NVIDIA, the people and the buyers aren't going to be there, this, that, and the other. And he totally leaves out the fact that even with the shortage, there's so many things going as far as dollars from the federal government and supply chain, shortcuts that they can come up with, that semiconductors drive the market, and they're not going to let that fall. And that's why Marvell today, Madavi, I told you, I said, go, all these guys, they're not going to go, they might take a bite in the ass, but they're not going to go to $10.
They might. Some of them might.
They will.
Some of them will. Some of them will. What always happens in tech is some of them totally fail. The good ones, the strong ones, whatever, they will acquire them for, a lot cheaper than what it is.
Okay, so
Elon's finding that out right now.
In the last 5-6 years on these chips and everything, right? But when the companies start going down, they're not going to be upgrading their services like they were, and they're going to get less than,
So there's what
the
they call
earnings are
Mango.
going
The
to hit.
Mango is the ones that are out there that they basically are like the Microsofts and the Apples of the technology world.
Well, mate, technology changes all the time. There's companies you think are golden right now won't be around in 4 years' time. And I'll say this.
Those people in those particular segments of the whether it's the gaming with the NVIDIA and the graphic processors, or Marvell that does a lot of stuff with automation, these guys have huge contracts and they're huge. There's like to unlodge them with a competitor coming in would be because of the fabrication and the technology.
Everything you're saying, they say every one of these bull markets.
Well,
there's five. There's the Mango guys that are out there. That's the top guys, and Marvell's one of them, right? So NVIDIA is another one, and they're just so entrenched that it's going to be
okay.
So we created when Bitcoin came out, that created a whole new industry that created all this demand for NVIDIA graphic cards and all that.
They weren't even expecting. I was like,
I mean, it came out of nowhere. Nobody expected that, So that's why it got such a boost compared to. So that's basically going to go on this. That's now included. It's not. You need something new industry that's going to be using new chips that have to buy all from scratch. And I don't see that right now. I don't see anything on the horizon.
Yeah. So the fabrication and
right, mate.
Set up.
Yeah, look. Let me just say something. So I have the chips themselves. They glut. What happens is, and you're seeing it now, when there's a shortage of them, and it happened before, this is how Taiwan Semi became the powerhouse. They all start losing money. They sell them for nothing, right? Some of them go away to nothing. What we had this time around, don't underestimate, man, how much this bloody rally was all because of QE. Insane valuations. And they're still pretty insane, right? And so, okay, they got contracts. Well, what happens if these companies cancel their contracts? Or the company that's a customer goes broke? So that's what happens in bear markets. That's what happens in falling economies. You got a bloody world war going on right now. Don't underestimate what's going on. You got inflation through the roof. People can't afford to drive a car, eat food, can't even buy baby formula in America, right? Let's be realistic. Right? Do you think people give a shit about a computer? Everyone's got their computers. They got their phones. I've got emails already from an Apple from a year old. Hey, why don't you trade in it? That's the real world, right? You just had China and Russia veto again for North Korea, right? That's the real world. You have oil at $114. That's the real world.
What's a veto over North Korea? I didn't get that.
So there was just a vote. Security Council's telling North Korea, "Hey, stop shooting missiles, you dickheads." Russia and China joined together and vetoed it. So there you go. And at the same breath, they won't help. So that's what's going on. So I think what you got to understand is, when you go through cycles and why there's such a demand in energy and food, is that security, and that's real, right? If you can have a fancy phone, a fancy game, or make-believe money, right, that isn't necessary to survive. So that's what you got to work out. Now, if by some miracle, like I said, there's probably a 10 at best chance a bottom's in, we go to new highs, and there's more delusion because it's all fake at this point. Everything's way. There's always a chance. The bottom, I don't think it is. But the reality is, you got to be disciplined enough. But the reality is, right, is you got to compare what people need and not when they don't have any money, right? Look at the cost, dude. You had South Korea have to raise rates yesterday. The only country rate low, and then you got Russia, China, and someone else last week are so destroyed they're lowering rates, right, from really lofty levels. But the point is, you've got this dichotomy of a lot of problems where the average man is really right around the world, really, really high costs, man. I mean, so you got to put all that in perspective. It depends what you are. If it's more important to you to have a new game or play or whatever the new toy is, then if that means you're already in the higher class, right? So you're not going to follow the problems facing the most of the world. So that's why bear and bull markets happen, right? Because the only people that are really buying stocks are those with money anyway, or entitled or whatever, right? Look at the percentage and the wealth and all that. So you got to keep all that in mind. That's why it's important to look at the macro breakdowns, different currencies, and just,
I'm buying Sealy. This guy told me just buy Sealy, and that's what I'm doing.
But so all those things are important points. But so the flip side of that is, so if those with money survive and get stronger, then it feeds the bull market to keep going. And so that becomes a bigger variation from the rich and the poor. So that's how you end up with revolutions. I mean, all you could go on about all that sort of stuff.
And here's the thing is, people always say, hey, why don't you just buy when the stock market got it sold off? I'm like, well, you know what always happens when the markets sell off and everything? The people who are average middle class won't have the money to invest at those great times, right? So they're going to miss it. That's what happens every time. And the people who have the money just get richer and richer. And
you know why? And I can best answer it, the questions you asked me about oil, right? The guy who's middle class, rich or whatever, or even poor that's in industry, he isn't going to even touch buying Exxon at $96, right? Unless he works for him and he gets given them, right? He's buying them at 20. So those guys that are strong don't fall for the Joneses. You got to make your own decision. You got to have common sense. So those guys, Madavi, are the ones that get richer off the sell-offs. So it's not just all the rich. Actually, a lot of rich come undone because greed kills them. They don't sell their stocks. They leverage and they get margin and lose everything. There's a lot of those stories too.
Well, that's called, there's two riches. There's one called the new money, and there's one, the old money, that's been around for a long time.
Right.
And that old money, they've been through all these cycles. They know what exactly to do.
Well, yeah, you got your more conservative people. They wait for sell-offs. Property's probably a best example of that, right? And look, the game isn't fair anymore when they allowed people like BlackRock and all these to buy property after 2008. Morally, that's pretty bloody wrong. What's even worse is people think that's okay. When people said to me it's okay, those central bankers, the Federal Reserve trading the market, I knew they're morally broken. Anyone who thinks that. You got to look at people that have power and control and then the average bloke. But we're a broken society when greed overtakes. That happens every cycle. And then it goes too much the other way, right? It's just humans, greed and fear, right? Simple psychology.
You know, I'm not going to get into politics or nothing, but
that's not politics.
Yeah.
That's human nature. I mean, all people do it. You don't have to be left, right, or brindle, right? But That's what happens when it comes to money. People, they get the entitlement mentality, or you got to keep up with the Joneses. You don't want to miss out, or you think it's safe because of people telling you on TV it's safe, right? That's why we go on about dribblers.
My only point is, right, when things are the best time to buy it, they took out all the liquidity out of the markets, right? So
yeah, no one's buying. No one's buying. Well, yeah, no one's buying, or they're too scared to buy because the guys on TV are telling you it's the end of the world, right? We're all going to die tomorrow.
So because that's scared money now they're playing with, and so they don't buy the best times. Now, when things get better, they just flood everything with liquidity like they have, so they all come in there and buy.
Well, so that's only since 2008. That's where it started, unless you take in America. In Japan did it, but that's it. That's history.
Yeah, I mean, they did it in the 2000s too.
Well, that's 2008. I just said that.
And 90s too. 90s, I think, is when it started, right? With the .com.
No. The first bailout.
They wanted to keep the housing, right? So.
But that wasn't flooding money. That wasn't QE.
Opening up.
So what happened? Okay. So the first big bailout you had was long-term capital. The first big bailout you had was long-term capital, right? That was all bonds. That was Greenspan.
Yeah, you had to keep the housing under control. They kept the rates down back in the 90s, and that's how we got the whole bubble.
Well, so how
right? So Bush wanted to keep it down because he had the war going and stuff, and we got the overheated the housing market.
So how the housing market started, the subprime crisis, is you had a bill that went through. You had Bernie or Barney Frank and Bill Clinton basically changed the credit criteria and a few other things. So people who weren't creditworthy could all of a sudden buy property. That's what pumped property.
We know.
It's nothing to do with rate. Well, that's what did it.
So and then they had these.
It's nothing to do with Bush or anything like that.
Could basically buy, they changed how you get loans and everything.
Well, that's what I'm talking about.
Yeah. So you have these interest-only payments for like the first 3 years, which people could buy like $600,000-$700,000 homes and pay $1,200 a month.
Right. So that's Frank and Clinton.
No, that was Bush. You wanted to make sure everybody.
Bush. It was Bush.
So there's two things. There's the saving and loans crisis, right? But what I'm talking about, the subprime came about. There was a bill that went through, and it changed the whole thing, right? And based on minority and all that sort of stuff. That was the final push. That is what did it. It's nothing to do with Bush. Then, as far go read it up. Mate, I don't have time. Okay. Then
Bush put some stuff in there, mate.
But that's the savings and loan thing. There's two things, right? And then we fly forward to 2008 because one thing Bush did bad, if you remember, I think his second term, he wanted to do the whole manage your own Social Security shit. Oh, God. Yeah.
No,
that was more what he did.
Huh? They want to put all Social Security in the stock market.
So we had two things. So I think the regulation thing was the thing that Bush did bad.
Yeah,
yeah. So you had the two presidents back to back. They're all just hopeless. And then you got so 2008 happens from the subprime stuff, right? All that Clinton sort of stuff. And then the Bush, so it all feeds. Remember, it delays. It doesn't happen overnight. So then the subprime happens. They pump all the money in, right? And then coronavirus happens. They pump all the money in. So now, finally, and don't forget, up until 2 or 3 years ago, they were doing anything to get inflation. We got to get inflation going. Now, well, they got it. So it always is a delayed factor, and at the end of the day, it's common sense. And what's happened in the society that wants it yesterday, they aren't prepared to wait, and now we're paying the price. Because you got every Fed meeting is like a track meet. Every earnings report is like a track meet, right? I mean a horse meet, right? Not a running meet. And so now your bankers aren't meant to be like that. Your central bankers aren't meant to be acting like that. Your politicians aren't meant to be acting like that because they've fallen for the greed. And now the greedy bastard who votes, he don't give a shit about any of that. And they're all partisan idiots anyway. So now you got mistake after mistake after mistake because no one's held accountable, right? I mean, we don't want to go any more on it. I got a lot of shit to do. I wanted a 15-minute podcast.
Context, but anyway, yeah.
But so all these factors fill in, right? And now we're at where we're at. So so at the end of the day, the market is a steaming cesspool of all this, and that's why it's important to use your technicals as a safety valve, right? Because no one really knows where it's going, right? No one really knows. We think we do. So you want to have a good guidepost of what's going on. And when you don't know, you just stay out. But what a good common... Look, I'm never going to be a bloke. And Madavi and I, we're too conservative to be the guys just buying like crazy in this bit of the stock market. So yeah, we missed all this being long on some stocks. But guess what? We're going to get this. We're going to be getting this, right? From the other way around. And you just want to get that meat. You don't, look, you're still going to get it wrong, even in a perfect situation. Something bad happens. Like, look at these companies with fraud or,
got it wrong today. Don't worry.
I mean, we've all had those, right? Just expect the unexpected, or it's rigged. Look at that Veru a few weeks ago getting destroyed. They come up with an upgrade. So you just never know, right? But if you have the right sizing and you have your right fundamentals and you can read the crowd pretty well, you're putting it all back in your favour. What you can't do is believe you're bigger than the market. You got to control your ego, your emotions. Because remember this, the computers are 80 to 85% of some of these markets. Some say more. They're unemotional and they're all based on previous data. So people are, like I said, are unpredictable but predictable. So that's why you want a system that kind of what the algorithms are following, right? It looks stupid when I said it's a double bottom and then a fail, but that's just people. People panic at the bottom, greedy at the top, and if you don't get the whole thing, it doesn't matter. You just want to get the meat, like that oil, right? If you've got most of this oil move, who gives a shit if you don't get that or that? What you don't want to do is be buying the guy buying it here at 128 and having to puke it down here at 92, right? That's where you don't want to be, and that's what gets people all the time. And the idiots that buy the dip. Yeah, it works in this, but in one day you lose it all. And this is oil I'm showing you. Let not somebody make-believe stock, right? Or make-believe digital currency or something, So it just shows you sometimes it's better to be safe. It's better to be out. You might miss something. But, just say you just took $10 on FANG. You got that. That's in your back pocket now. Maybe that goes up another $10. Maybe it falls back $10 or $20. Who knows? But you got the $10 now, right? So bird in the hand's worth two in the bush is a good trading maxim.
Amen. Well, that was I think we got off a little bit off of our topics as usual, but it was a good conversation.
Yeah, they're good topics to do, but there's sort of things you could go.
Good points for people to be reminded of.
Yeah, and maybe I'm a little bit too. I'm more conservative. When it comes to things, just because I think when you get whacked a few times, as a trader, that's what will happen. And so you want to listen to people that are pros that have been around and they know what works and what doesn't. And you see, so if you want to learn options or risk, look at the bell curve, those +2 or minus, if you remember from maths at school. That's what blows people up, the black swans, right? And now we got constant black swans, but we got, as Madavi said, all this liquidity saving it. But what it's not doing, it's just postponing it or making it bigger and bigger. Who knows? Don't forget, there's a chance All this is 1, 2, 3. Small chance, but if they have to flood this market with money again, which they probably will if it all goes to shit, right? Then you get it all over again. But at some point, you get what happened in other situations. So
I'm
we'll
going to
see.
make some predictions right now, and then we'll come back and look at it. I bet you they're going to change the mandate from 2% to more 3%.
The mandate for what?
The Fed.
What mandate to? Oh, inflation?
The Fed's mandate is to keep inflation at around 2%.
Yeah, they're doing good there.
Well, I think they're going to change that mandate to 3%. That's what I'm trying to say.
So
more to 3% than 2%.
So you by doing that, so they don't have to raise rates. Is that what you're saying?
It's kind of we're never really ever been at 2%. They just fuzz it over. I think it's going to be really hard to do that at 2%. It'll be probably a little bit easier to do it at 3%.
Well, they couldn't get it to 2 forever. Would be their argument.
Yeah, I mean those.
Well, I got a question for you. Where did the 2% come from originally? Where did they pull that out of?
Historical data and how much income goes up in housing.
Yeah, so I guess they said.
There is a basis on it. Oh, okay.
Yeah, it's housing and income. The ratio, if you looked at 100 years, it goes up the same amount incomes and housing. In the last 3 years, that 100-year line that they just like one of your lines you draw on your curve or your charts, it has gone totally out of whack, parabolic.
Yeah, so, because of all that pump money, no doubt, right?
Oh yeah, all extra money. Yeah. Which is because of a black swan event like coronavirus, which probably was already a problem prior to the COVID outbreak, but it.
Well, they use it as a political thing in the end, right? So pushing agendas.
Anyways, I don't think there's ever been a 2% rate. Probably since it probably began for the first 10 years. And after that, I don't really think the true rate was at 2%.
Right, that's what I was asking, because it seems to be almost nothing or really high. So I'm wondering where 2 comes from.
Yeah, it's if you go look at when they created it, that's the thing. And also, they want a little bit of inflation, is right. So people were holding their homes and everything and built values and stuff, and that goes up with it. And
okay, so it's a bank. So it sounds like it's a banking tool for loans and stuff like that. Okay.
Yeah. So people go, why don't we keep zero inflation? Well, then your house would not appreciate. Some things would not appreciate.
Right. So, but here's the other thing: simple economics. So there's different ways to restrain price growth. It doesn't just have to be interest rates. That's the whole bullshit. The myth with it all. So the price of petrol going up, the price of food has a bigger effect than interest rates. Not everyone borrow, but the interest rate argument always comes out of the rich, out of the bankers, right? So they get richer and richer out of each one of these. Go look at that. Because at the end of the day, it's
one of the other things in that equation is austerity. And what's happened?
Austerity destroys poor people.
So austerity, tightening the belt of the defense and the military complex. You're talking about a war now that we're that we're sending all this stuff to Ukraine. It's just kind of funny how these things all fall in place with.
Well, you're saying that as an American. Americans sending F4. Go have a look what some of these other countries are sending.
Our petrodollar and our dollar bill.
Yeah, so you're missing what I'm saying. So you're looking as an American. It's really not much coming from America. Percentage. You look at some of these other countries. So some of these other countries are going to have even a bigger... Because at the end of the day, you're spending money right elsewhere. So people don't think about the longer term. They spend more on social welfare every day.
Clearing out all its old stuff, sending it to Ukraine and getting new ones.
Well, how about the deal last week, or was it last week or 2 weeks before, where they're going to lend $500 million, $500 million worth of military to India, and they called it aid. So just remember, next time you get your mortgage at Bank of America, hey, can I have some aid, please? I want to buy some. And so no one even thinks of that. The logic is everything you just said is 100% right. It's to buy weapons for the military-industrial complex. And then the argument is it gives jobs. Okay, fair enough. Then why don't you say the same argument for the oil and gas industry, for example? How many jobs come from that? There's so many made-up uses.
Yeah.
Sorry? Oh, yeah, it was like that. They snuck it under the table.
No.
It was there. It was there for a day. It got plenty of news outside of the US, but I'm sure it was on the news here.
No, I never heard of it.
Well, RT probably never covered it, right? So.
Well, you know that debt will never get paid back.
Oh, they don't care. It's I think Johnny said it 100%. It's just to buy the weapons.
Yeah.
Right. Well, so they just pay, as long as you pay the interest every month or year, whatever it is, everything's good, right? I mean, how many people, well, I'll just put it another very simple way. Most people go to their grave not paying their mortgage off, right? Same bloody thing, right?
Well, that's how they came out with this. When you're old, you could not pay your house no more, and it was called reverse mortgage.
Yeah, no, I get that, but isn't it the same sort of thing?
Well, they also, it's the death tax now. They tax the crap out of what you ever want to leave.
Well, it also depends how you.
It depends where you live for death taxes, doesn't it?
Now, I think Biden made that a new thing.
Well, I'll give you a little tip. There's no death taxes in Australia, so.
You're not thinking that. So.
Well, in the United States, the federal government has some, and some of the states have added ones too.
Nice.
Like California, where you love it. It's got some really nice features besides the weather.
Yeah, they got a nice little earthquake. Do they have death taxes over there? Silly question, I guess.
Absolutely. Wasn't it the Gettys who lost all that property up north because they couldn't pay the death taxes when he died? It was the Gettys, right? They just handed it over to the state.
No, it wasn't Getty.
Who was it? It was one of those ones.
Yeah.
It was.
Getty was left to a foundation.
Yeah, because they couldn't pay the compound he had. They couldn't pay the taxes on it. The Yankees. I don't know. You know, when the Yankees happened, New York didn't have that year that Steinmeier died of the Yankees.
Mm-hmm.
You know, it didn't have no death tax in New York. Otherwise, they would have to sell the Yankees. So he died right before.
Oh, they took it off and put it on. Wow, that's suspect.
Yeah, so that year that he died was the year where the death tax, where they put it on, it expired that year. So the whole year, nobody had to pay death taxes in New York. Otherwise, it would have been billions of dollars owed. Wow,
man. That's interesting.
Sure. Hey, he didn't make, let me tell you, he didn't make it out through the new year.
Well, on that note, given that we're not Yankees fans, we're Astros fans here and you're a Dodgers fan. So no love lost there, I guess, right? So anyway, we did go on. I did promise this being a real short one. It turned out to be a big dribble, but hopefully you got something out of it. Like it, subscribe it. Weekends coming up, long weekend. Enjoy it with your family, barbecues, good wine, good beer, all that. Whatever you do, take your pets for a walk.
Ring the bell.
Yes. So on that note, see you. Thanks, everyone. If you're getting anything out of us, let us know. If we're just totally barking up the wrong tree, let us know, because it is a bit of time, so I'd hate to see it being wasted. So I will catch everyone later. Bye now. And remember, if you can't be cool, you know what to do.